Okay, folks, you better get ready. In today's video, we will break down the top 5 penny stocks to buy right now in March 2024 with massive upside heading into the coming months and quarters. Now, each of the stocks on this list are solid buys. However, we are going to go through the why, fair prices to pay, solid strategies, and how to take advantage. And keep in mind that each of the tickers on this list also have real growth behind their businesses and or a clear upcoming catalyst, so these aren't baseless hype stocks. Let's get to work. Timestamps down below, and the only thing I ask in return is that you hit that ravishing like button, turn on the notifications, and subscribe if you find value in the content. And as always, never buy a stock just because we talk about it in a video. You must do your own research and come to your own conclusions. If you are the one taking the risk, you got to be the one doing the ultimate frisk. Also, quick plug, our flash sale on ZipTrader options, which now includes options, alerts, and ideas, is still on. Coupon code alerts will get you $200 off before checkout. Link below. Give it a look if you're ready to learn options and join the team. Okay, number one, BBAI. BBAI is Big Bear AI Holdings. BBAI is on a hot uptrend heading into earnings next week, but let me give you a bigger picture look. BBAI operates in the domain of AI-powered decision intelligence solutions. Their business model focuses on providing algorithmic powered decision intelligence to assist customers in making complex decisions. This includes a broad array of services such as national security, supply chain management, and digital identity solutions. Now, folks, this company has a significant emphasis on serving sectors that require very, very complex decision-making support. And leveraging AI can really go far in enhancing operational capabilities and outcomes, and that's BBAI's whole value add here. Now, in terms of their business growth strategy, well, that's all about ramping up higher margin contracts and leveraging mergers, such as the one they did with Pangiam, which allows them to penetrate new markets in a very aggressive way. These strategic moves are intended to enhance not just the company's market position, but also expand its revenue base and improve their profitability. Now, the reason that BBAI is super relevant right now is because its earnings report is coming on March 7th, and all eyes are going to be on them as one of the latest AI small caps to report, which is great. And there's not many analysts covering BBAI, so that leaves it with a lot of room to surprise. That said, usually the best strategy with AI stocks reporting earnings this season has been to simply ride anticipatory runs and then sell out, locking in profits prior to earnings. Holding through earnings has been a big gamble, and even in big beats, the best strategy has been to buy the rumor and sell the news. But after earnings, BBAI should have longer term potential. There's a good reason to believe that the best of BBAI's growth is ahead of it. If you dig into their filings, you see that Big Bear AI has a substantial backlog worth approximately $170 million, indicating a substantial pipeline of future revenue that can show up on future reports. The company's financial guidance anticipates annual revenue to be between $155 million and $170 million, with efforts aimed at achieving higher margin contracts to bolster future performance. Folks, more and more contracts with higher and higher margin. What does that mean? Well, it means cha-ching. Of course, they also happen to be positioned in the middle of the biggest euphoria sector right now, AI. Everyone and their mother is hiring AI companies right now to please their boards and stay competitive, and BBAI should be a big benefactor of that. Moving on, what's a good price for BBAI? Well, below $3 is a shoo-in my view, but if you're going to be buying above that level, specifically to get further momentum, you got to make sure that you're having an extra tight stop loss because these things can dip pretty damn fast. Now let's talk about risks and problems. Big Bear AI's journey is not without its challenges. The company's financial health includes dealing with substantial debt with more than $190 million against its cash and cash equivalents. That's a lot of debt to carry on even in a euphoria cycle, right? Moreover, Big Bear AI has been experiencing significant free cash flow burn, with projections indicating a continuation of this trend. Now, when you're dealing with high growth potential AI stocks, you're going to have high risks as well. So if you're going to be playing this stock, just keep that in mind. Number 2, Mara. Mara stock is a Bitcoin miner and one of my favorite plays right now because her catalyst is Bitcoin's halving, and that's coming in April 2024. Now, Bitcoin has historically gone up into halving and gone up further afterwards and broken into new highs later on. If that pattern repeats, which it's setting up to, then you should see Mara break out higher and higher. Mara had a nice shakeout on earnings this week, and short sellers are screaming as loud as they can to sell and panic out of her, and I'm hoping that this brings about a bigger dip, but I doubt that that's going to happen. Obviously, bigger dips would be nice because then you get better entry points for bulls. Bitcoin keeps seeing more and more buying pressure, which should help motivate her upward over the medium term. So even if she gets a dip now, I don't see that lasting for long. So price points, well, I believe Bitcoin itself is going to hit its all-time highs after halving, and Mara is better positioned than ever to take advantage of that. And so I believe Mara herself will hit into the 40s, 45s at cycle highs this year. So buying Mara under 30 with a tight stop loss to simply ride more momentum isn't a halfway bad idea. By the way, for those in ZipTrader options, we just put out an options alert on a contract I like for playing Mara into and after Bitcoin halving. It's cheaper and has more more leveraging power as compared to buying shares. So something you definitely want to check out if you're a member. Number 3, FHUN. So FHUN Fund is selling off very aggressively from its last rally that took it from the 3s to $24. And this stock is a horrible long-term investment, but it's a very fun catalyst play. It has a long history of massive catalyst pumps and then take profit cycles on specific reoccurring catalysts. And in fact, just some 6 weeks ago, we correctly called it out before a 4x intraday run, pre-split prices, but I see another opportunity coming soon, and I'll explain why. But first, context. Phunware Inc., trading under the stock symbol FHUN, offers a comprehensive software platform designed for companies to engage, manage, and monetize their mobile application portfolios. This platform encompasses a wider range of products and services, including cloud-based mobile software that integrates with mobile applications through software development kits. Now, the reasons markets tend to pump up FHUN stock is because they worked with the Trump campaign in the past to design an app, and so now nearly every time there's big Trump-related campaign news, it tends to go up dramatically. And the reason it nearly 10x'd in February was because of Trump's successes in the New Hampshire and Iowa primaries, which led to speculation that FHUN would get a revenue infusion. Now, if this is what happens when you have 2 primaries for 2 small states, imagine what could happen on Super Tuesday next week, which is March 5th. The states voting on March 5th are some of the biggest, most closely watched ones like Texas, California, Massachusetts, Tennessee, Colorado, Virginia, and such. And in these states, it's Trump versus Nikki Haley, and it's projected that Trump will win, which will likely cause a lot of attention to be paid to FHUN and could certainly cause some big rallitos. Whether you like the former president or not, I'd argue it's an interesting speculative trade setup and certainly one to put on your radar. Okay, number 4, SoundTown AI, S-O-U-N. So SoundTown AI specializes in developing voice-enabled AI and conversational intelligence technologies, allowing users to interact with products and services through natural spoken language. Their advanced AI system can understand, analyze, and respond to human speech, enabling applications across various platforms such as mobile devices, cars, and smart home devices to deliver interactive user experiences. Sound has recently gotten a lot of attention because of NVDA's stake in it, and 13 days ago I made a video explaining why Sound was still a buy even at $3.54. Well, Sound then went on to more than double to $7.91. Then yesterday it reported earnings, and boom, it got beat down like a rabid dog, which I believe quite quickly will be providing a big dip buy opportunity. Now keep in mind that we are seeing stock after stock in the small cap runner segment getting beat down on earnings. It's not surprising that Sound has gotten beat down, and Sound may dip well under 6 to perhaps the low 5s, even 4s again, but I believe the overall trajectory and momentum suggests a break of cycle highs at $7.91 and a continued run towards even $8, $9, and $10. So what happened on earnings that was so bad here? Well, SoundTown AI reported its earnings with revenue of $17.1 million and losses slightly wider, ever so slightly wider than expected at 0.07 per share. But I don't think that Sound sell-off really has much to do with the miss. In fact, I think it has a lot more to do with the fact that the stock has run up so much on AI euphoria and post-NVIDIA stake news, and at some point, people are just simply going to lock in profits and you're going to get a big breath. But bigger picture, there's reasons to believe that this is going to rebound pretty damn quickly. I mean, bigger picture, Q4 revenue soared by 80%, adjusted EBITDA improved by 80% year over year in Q4, combined cumulative subscriptions and bookings backlog reached $661 million, doubling year over year. The net loss decreased by 42% in Q4 and by 24% to $88.9 million for the full year. Liquidity, total cash balance exceeded $200 million. Total operating expenses were reduced by just 16%, and analysts would have loved to see 25 to 35%, but that just didn't happen. Overall, though, I mean, revenue is growing super fast, 80%, and operating expenses are being cut, even if they're not by the margin that markets would have wanted. So it's only a matter of time before this can eventually lead to printing real net income. And I mean, look, net loss did decrease by 42% to losing just $18 million at revenue of $17.1 million. You're not that far away from flipping into an overall profit. The question is, how many more clients is Sound going to be able to attract, and how many current clients is it going to be able to further scale? In this kind of market cycle where everybody's going into AI, I think that it's going to be pretty easy for Sound to flip into a profit in the coming quarters. Anyways, though, for the moment, in my view, this has more room to fall in reaction to this earnings, but the dip will get bought up and get to new cycle highs, in my opinion. Markets are simply supporting proven AI stocks right now, and this one will be once again in the future. Number 5, SoFi. So SoFi has been on a nice overall momentum trajectory with a lot of room to fill in before its own all-time highs reached in the last bull cycle. SoFi Technologies is a financial services platform that has been rapidly disrupting the banking sector. Its mission is to help people achieve financial independence by offering a range of products from personal loans to investment platforms, specifically targeting the younger generations. This innovative approach to banking, coupled with its focus on technology, makes SoFi a very unique player in the financial industry. In terms of growth trajectory, I mean, SoFi has been on a very remarkable growth trend, demonstrating robust revenue growth. Specifically in 2023, SoFi reported a revenue of $2.12 billion, which represents a 34.91% growth year over year from $1.57 billion in 2022. This sustained growth is a testament to the company's ability to expand its offerings and attract more customers. And in terms of user growth specifically, which is a really exciting segment, the company's strategy to broaden its member base and product offerings is paying off a lot. SoFi achieved strong year-over-year growth in both members and products in the fourth quarter and full year 2023. New member additions of nearly 585,000 in the fourth quarter brought total members to over 7.5 million by year end, up over 2.3 million or 44% from the prior year. So very, very successful at getting new users, which are all new leads for all of their different products. Now, in terms of future catalysts, looking ahead, SoFi has multiple catalysts that could further propel its growth. For fiscal year 2024, SoFi has provided guidance that suggests a strong performance ahead. They anticipate adjusted net revenue to be between $550 to $560 million for Q1 2024, with adjusted EBITDA expected to be in the range of $110 to $120 million. Additionally, SoFi has updated its earnings per share guidance for financial year 2024 to be between 7 cents and 8 cents, compared to the consensus EPS estimate of just 6 cents. This guidance reflects the company's positive outlook and strong growth trajectory. Furthermore, a detailed analysis by DataDin Investing predicts that SoFi could guide for $2.6 to $2.7 billion in revenue and $560 to $610 in EBITDA for the entire 2024, which could cause a lot of rallitos in the stock price if they actually do end up doing that. But bigger picture, folks, I mean, why should you even pay attention to SoFi right now? Aren't there a lot of exciting companies right now? Well, I think that SoFi's approach to diversifying its product offerings and continuously innovating within the financial services space, which is very, very lucrative, makes it a pretty damn exciting stock to pay attention to. I mean, the company has managed to grow its loan originations year over year, even in challenging segments like student and home loans, which are very challenging in today's market. SoFi was also just listed among the world's top fintech companies in 2023 by CNBC, highlighting its prominence and the growing acknowledgement of its role in reshaping banking. And despite some analysts expressing concerns over valuation, SoFi continues to be recognized pretty universally for its impact and potential within the fintech sector. So anyways, folks, I'd argue this combined with the overall momentum in SoFi stock makes SoFi a top penny stock right now and one you got to pay attention to. But anyways, folks, that caps off today's video. What are your favorite plays? Let us know down below. Make sure to take advantage of our options program with the newly included alerts down below, and we'll see you in the next video.